Mortgage rates increasing for the fifth consecutive week, reaching their highest level since the beginning of August. For more on the current state of the housing market, let's welcome in Chen Zhao, Redfin senior economist. Chen, it is good to see you. So you know what? Let's use Josh Lipton as an example, Chen, because I am currently locked in a 30-year fix, 6.5, Chen. It's ugly. And I was told, you know what? There was absolutely 0 point in you refinancing Lipton until you get back to 5.5. When are we getting back to 5.5, Chen? What do you see ahead?
Well, it might be a little while yet. So you're right. Mortgage rates have really increased a lot over this last month. I think there's a few different factors that have really played a role here. So one is we've had stronger economic data, starting with the jobs report on October 4th. That means slower rate cuts from the Fed. In all likelihood, we'll get another read tomorrow morning on the labor market. But another really big factor is just the election. With the odds, changing these last couple of weeks, investors have become a lot more worried about President Trump's proposed tariff policies and how that might be inflationary for the economy. People are also worried about additional government spending, depending on who wins the White House and who wins, the House and the Senate. So mortgage rates have moved up a lot. So there's a lot of factors here. And the Fed is definitely, going to keep cutting, but mortgage rates may not, decline a lot more. So there's a lot of uncertainty here, I think.
And I want to pick up on one of those uncertainties that you mentioned, the election. Housing affordability has been a big topic of conversation on the campaign trail. So what would a Trump second term or the election of Harris mean for the market?
I think that there's a few different factors here, right? So you have to think about what, another Trump administration or a Harris administration means for mortgage rates. And those could look really different depending on which policies they choose to enact and, how negotiations around like the TCJA, tax cuts, how that pans out next year, for example. It also depends a lot on, whether Republicans or Democrats control the House and the Senate, right? So, bond market investors are really concerned with anything that stokes inflation or anything that really increases government debt by a lot. On the flip side, for the housing market, you also have to think about housing supply, right? So Vice President Harris has talked a lot about how she wants to build a lot more housing units, additional 3 million units. That would matter a lot for the housing market, but she also wants to implement a $25,000 first-time home buyer tax credit, which would stimulate demand. So there's a lot of these different factors at play. So it's hard to make a really concrete forecast right now, depending on who wins the election. But these are some of the factors that we would want to look at.
Chen, you mentioned supply. Why don't we have more supply? Why don't we have more inventory? I mean, is it regulatory challenges? Is it permitting? Is it builders can't find enough labor?
It really depends on if you're talking about existing supply or new home supply. So on the existing side, a lot of homeowners are really locked into very low mortgage rates, right? So a lot of folks refinanced or bought homes during the pandemic. So they have 3%, 4% mortgage rates, and they're very reluctant to give that up and trade up for a 6% or 7% mortgage rate right now. So that's, keeping a lot of existing supply off the market. But on the new home supply side, it's very hard for builders to build because they're also facing really high rates. And there's a lot of regulatory challenges, barriers to building new housing. And a lot of those factors are controlled at the local level. So it's actually hard for the federal government to play a role there. So these are all, things that keep inventory really low right now, which is one of the main challenges in housing.
So given these challenges, what type of buyer are we seeing in this type of market? And regionally, are there certain pockets of strength?
Sure, yeah. I mean, the people who are moving right now are really folks who really have to move. So even though inventory is really low and prices are really high and mortgage rates are really high, some people have to move because of life reasons. Maybe they got a new job or they had another baby. And so for these folks, it's not really, much of a choice. And yes, there are certain, pockets that are stronger or weaker. So we're seeing a lot of weakness right now in the Sun Belt. So for example, Texas and Florida are some of the states where the housing market is a little bit weaker. In the Northeast and more affordable places, you're seeing pockets of strength as people are looking for more affordability.
We're talking a lot about home buying. What about rents, Chen? What are the trends you're seeing there?
Yeah, the rental market is actually one of the brighter spots if you're thinking about affordability. So according to our data right now, rent levels are basically around the same as they were 2 years ago. So that's before you adjust for inflation. And wages are still increasing about 4 or 5% year over year right now. That means that even though rents increased a lot during the pandemic, these last couple of years, we've started to chip away at some of the affordability issues in the rental market. And that is, kind of starkly different from what's going on in the housing market, where home prices are continuing to increase about 5% year over year. So the rental market is, I think, kind of a bright spot right now if you're thinking about affordability.
Chen, great to have you on the show today. Thanks so much for joining us.
Thank you.